everybody, it's Chris from Serene Education with the 4 majors next update for the 14th of May 2013. Good morning, folks. Okay, 4 majors this morning, starting with the euro against US dollar on our FX8 ultimate template. This little box of goodies here on the bottom right. Let's have a look and see what's happening on the euro on the daily. So, bearish engulfing, prior resistance here at this 38.2 weekly fib retracement consolidation area. And what it's done now is you've seen price falling back to the underside of the 38.2, which is our monthly fib retracement area. So back below this area, which is not a really good one, and not too far from the 1300 mark. 1300 a major support and resistance level for this particular pair. And notice all the moving averages are above price now. Not a good sign. So what I do is I look at a little box over here to see if there's any genuine sentiment, ideally on my long term, to constitute to actually tell me that I should be looking for any trade sentiment. And you can quite clearly see that price has just gone sideways, and that reflected. It's just reflected here on the actual the template. No true direction, and ideally I like to look to see the RMO complementing the moving average one down here to start with. But you can quite clearly see this is also not really working together as a team. So the only thing I do have here that I can work with is the fact that we've actually had a third resistance level at this 13,149 mark. And what it's done is it's taken us back below this price support and resistance level here, this consolidation. The prior support area here, not too long ago, back in April, early April this year. So now you can see a lot of indecision candles, a pullback yesterday in particular, and then last night on the Asian session, a bit of drive to the upside, but you can see that price is now hugging the downside of that. So just want to go into my 4-hour chart. You can quite clearly see that all the moving averages are still above price, and you can see we are still seeing swing lows. The prior consolidation area here, as I mentioned, just move that to the one side. You can see quite clearly prior consolidation, and before that we were trading above the institution through most of April. However, near term, you can see we've actually broken through the institution yet again, and we're trading below it. So not a really good sign for euro at the moment, unfortunately, because of the fact that we're actually trading below that institution, but also below this price support and resistance level here at the 12.98, just under the 1300 mark. So as long as that continues, then we should be looking for negative sentiment intraday to be the factor. The hourly chart, let's have a look and see if we can see anything here. Slight pullback on the Asian session over the past 5 hours or so. Bull run last night at 12 o'clock GMT. However, since then price has just pretty much just fallen back, retraced. So it's imperative, if we are to still see further negativity, then obviously we'd like to see price actually trading below the prior intraday lows, roughly down the bottom over here. This consolidation area here, the 12.95 mark in particular. RMO is above the zero, and the MACD is above the zero as well. However, we are seeing a dark side of the MACD, which is telling we're seeing consolidation, and sure enough we are. So if this is to be positive intraday, then we need to see price actually using this prior resistance level intraday. Let me just see if I can zoom in. So you can see a lot of resistance here over the past couple of days intraday. We had a breakout yesterday, we're having a pullback now. If she uses the 20 and 50 intraday as a support, and she bounces higher and reattempts this 38.2 mark over here intraday, then we're seeing another swing, and it's going to be higher than the prior swing. So we can effectively call this a nice support area, and then we can see price building on that. The other scenario would be to see price actually failing here at the support, this near-term support intraday, and then falling back towards the price support area down here, which is the consolidation support. Get below that, and then she's obviously going to be falling back towards these lows down here at the 12.76 mark, and ultimately down to the 23.6 mark. Onto sterling. Here again on the daily, you can quite clearly see price has been making higher highs recently, swing high, swing high. However, near term, we've actually seen a prior resistance area here quite clearly. You can see over a full week in particular of trading, price has actually found resistance here at the 50% weekly retracement area, and that goes from from our current high that we had here just recently in January to the current low that we had. Yeah, I think it was, what's this candle here? There, so the 12th or the 13th. It's the 12th or the 3rd, apologies, of March. 12th of March, we had a nice support here. A lot of indecision candles, and then we had this decisive candle. So it was almost a morning star formation, and then prices reverted to the upside. 23.6 was a major support and resistance level, and this is the major support and resistance level, the fib level resistance and support pullback retracement area. that's been from our monthlies, and that also constitutes to our major support and resistance level in the shape of the 15,300 mark, which goes back way back to 2010 in particular. This area over here where we saw the consolidation at the bottom here is the 14,800 mark, where price actually consolidated in 2010. So we thought this was in genuine a breakout with a pullback and then a continuation in the direction of the breakout. That failed to materialize, as we saw sterling really pushing higher and then finding momentum to break above this current support and resistance level here at the 23.6. That occurred, however, it failed to actually rally even higher with that after falling short here at the 50% retracement from the January high to the lows here in March. So now you can see the US dollar has gained a lot of strength recently with some fantastic production figures, as well as some very low unemployment figures and then some great employment figures. So a lot of good stuff coming out of the US at the moment now, and that's going to be driving the US dollar higher against most of its cross pairs, which is the detriment to sterling in particular, as we've seen price reverting to the downside. Clearly moving into this 23.6 fib retracement area here. Swing high, it's broken that, but still in this consolidation area. We want to see price now breaking below this ideally, and then we could target those fib retracement areas to the downside, particularly this one. The first one would be here to the 23.6 area, which is 110 pips away, and the next one would be a total of 460 odd pips. But from the 23 to that area here to the zero line, you're looking at 351. So there's more than enough. There's not more than enough pips on the table to be made. Just looking at the RMO and the MACD and the moving average over here, pretty much complementing each other on the long term. However, intraday a bit undecisive, and that's primarily because we're trading into this consolidation support here. RMO is below zero. MACD is still driving low with a lot of negativity, which is great. We want to see that continue if this is genuine negative sentiment here. You can see we have a red candle and a red arrow, and our candles are red. It's just this consolidation here, and as we speak, I think the 50 period moving average is in play as we speak. So down to our 4-hour chart, and you can quite clearly see pullback, trading at the underside of the institution. All our moving averages above price. So looking very negative here. RMO is below, MACD is below, however pulling back towards the zero line. And as long as it maintains, all these maintained below the zero, and we can get below this 23.6 here, then ultimately we should be looking for further negativity. So we're looking for a nice bearish engulfing candle, primarily on a 1 hour chart in particular. That would be great, as we can see that prices are making lower swings as we head to the downside. So very, very important that we see something happening quite soon. If failure to do that, then we could see price actually using the 23.6 as a stepping stone or support, and then price is going to build on that. So it's very important that we see something happening near term. You can see quite clearly that the candles are very undecisive here, especially on our 1 hour chart. You can see very, very indecisive the candles over the past 5 or 6 hours. So we want to see decision, and when we see the decision, we act on it. US dollar Swiss franc. As I mentioned, the US dollar has gained a lot of strength recently, and that's also the case against the Swissy. And sure enough, it's punched higher than the prior consolidation high here that we had back in February and March of this year. Failure here is going to April, however, still wanting to move higher and punching and breaking it. Now we're seeing consolidation, a pullback. Now this is all going to take place above here. If the US dollar can hang on to these highs and build on that, then ultimately we should be looking higher. And if that's the case, then the first target we're looking at from where we are now to this area is about 190 odd pips to this 23.6 fib retracement area, which is on our monthly time frames. On this particular time frame, you can see there's also, like the euro counterpart, very mixed signals. So we want all these to be complementing each other. A bit of buying sentiment happening here on our intraday charts. However, you can see our mid-range candles, 4-hour, hourly, and 30-minute, not really complementing anything. We still have a bit of sentiment on the daily and particularly the weekly, but our 4-hour and hourly not really complementing each other, and that needs to occur. So if we can stay above these prior highs over here and build on that, i.e. a nice bearish, bullish engulfing candle above these areas here, and we can punch above this near-term resistance level, then ultimately we should be looking for a top side. So for the US dollar Swiss franc, look for any positive sentiment intraday, so we can actually buy on the bounce. So you can see the pullback here. We can see a nice bullish engulfing candle, then buy on the bounce, and then target the prior highs as our first target. Second target, the area roughly here, just short of the 97.52 mark in particular. Last pair of the day is US dollar Japanese yen. Here again, like it's the Swissy, We have seen the US dollar breaking just recently a prior high, consolidation high, which happened to be the monthly 50% retracement area on this particular chart. And you can see we came unstuck here for a number of months through April and March. April. Most of April we saw resistance at this particular point, and we can see recently we had a nice breakout. This was happened on what's this Monday, that's Friday, sorry, Sunday, Friday, so it was Thursday. We had a nice breakout. Now we're seeing consolidation, a lot of spinning tops here. However, as long as that all happens above this area over here, we're still looking for buying opportunities. RMO is above the zero line, MACD is above. We're seeing a lot of positive sentiment on our long term to complement this long term trend for the US dollar against the yen. However, intraday we're seeing a bit of negativity, and that's primarily because of the breakout. We're seeing consolidation now. As long as it consolidates, we could see a buying opportunity now in our smaller time frames, like a bullish engulfing candle of some sort, engulfing this consolidative range. Then we could pull the trigger and we look to the upside. Even if you take the current highs here to the next targets, which would be our 61.8 on our Fib retracement area, we're looking at 360 odd pips. So there's more than enough profit to be made from this as long as we get out of this consolidation range. Okay, so be patient. The R squared is complementing all the time frames, and it's complementing that negativity intraday as well. So we want to see the 5, 15, and 30 minute all starting to go blue. We get a nice bullish engulfing candle intraday, and then we can start looking to target the upside. If you want to, you can take the start of the support, the trends intraday on our hourly chart to the current highs. You can see the 23.6. That would be our first support level intraday. As long as you can maintain above that level there, then look for a nice bullish engulfing candle, nice buy candle. You can see the candles are still blue. Even though we have red ones, we're still blue. And all we need then is a nice bullish engulfing candle with an arrow, and then we could target back up to the upside here near term, which from where price is trading right now to this level is 68 pips away. So there's more than enough in the tank. And then, as I mentioned, we could start looking towards that 61.8 long term for that 350 pip target. Okay, so that's what we're looking for intraday. Please see if there's any news out there that's going to really back up any potential trades that you have. There's not much news out today. Euro, we have industrial production month-on-month figures. Expecting a slight expansion on that 0.2% increase, which is good. If it comes out any higher than that, then it's going to be fantastic for Euro. If it comes out lower than that, then expect the US dollar to really gain a bit more strength against these cross pairs. We have the ECOFIN meetings today, and then just nothing for the US market. We go straight into the Australian later this evening for the annual budget release figures, and then we have the it's 10 for the Australian. We have 10 a.m. GMT this morning. We have the annual budget release figures. But this afternoon we have one news announcement for the US market, and that's at 1:30 GMT, and that's the import price month-on-month figures. And they don't see a change there, same as the prior figure. So back it up with some money management. Apply the rules for the particular templates. Keep it simple, guys, and then just let the template do the work for you. Okay, we just got to build. We just got to think about it cleverly. We just got to trade in the direction of the trend. We got to apply spot on money management and keep it very, very mechanical. Okay. Other than that, have a fantastic trading day, and I'll catch you guys first thing tomorrow morning. Until then, you guys trade serenely.